Hi everyone, I hope you people are doing great. So welcome to the third video of section A debrief of our AA pre-December 2024 mock. And in this, we will be doing the case study number 3, which is Titanis and Company. So let's begin with the debrief. And I hope that you're already done with this question. And yeah, let's start. So let's read the case study first, and then we'll come to the questions that are being given to us. So it is 1st July 2005. You're an audit manager in Titmus and Company responsible for the audit of Aether drills for the year ended 31st of March 2005. So dates are again very, very important, as I also told previously. The financial statements show profit before tax of $11 million. So, okay. This will be used when we calculate the materiality, if ever we need to calculate in this particular question. Okay. The audit for the financial year end is nearing completion, and several matters have been highlighted for your audit for your attention by audit senior Sakura. The matters have been discussed with the management. So already we have discussed these matters with the management, which is a plus thing, who has confirmed that these will not be adjusted. So we have already discussed with them, and they're already saying that this won't be adjusted. So now what will be a further steps? So there are two matters. So basically, this question is related to your audit reporting section. So I hope that you have revised this section really very nicely. And this is a very common question which will always be there in your paper. And I know a lot of students do get confused between them. So I'll try my best to explain all of the things that are there in this particular question. I'll also try and make a separate video just for this particular topic and explaining you different aspects of it. Okay. So the first case scenario is in February 2005. So basically before the year end. So this is before the year end. So that is the reason dates are very important. We need to see if it is before the year end or after the year end, right? A major customer went into administration. So administration basically means liquidation. Basically they had, problems with their finances, and now they are, liquidating and winding up. Basically this means there was a balance of $2.5 million owing to Aether from this customer at 31st March 2005, which is still included in trade receivables. So we had a balance of $2.5 million, which of course won't be now, won't be receiving this amount, but they are reluctant, but the financial but the management is not still adjusting into the financial statement. So this is the first case. Okay. Second case is a court case has begun in January 2005, again before the year end, involving an ex-employee who is suing Aether for unfair dismissal. Lawyers estimate that damages of 15,000 are probable to be paid. So 15,000 is very small amount as compared to the profit and materiality threshold. So maybe this is immaterial. Let's see. The financial statements include a note describing the court case and quantifying the potential damages, but no adjustment has been made or made to include it in the financial statement. So basically, there should be ideally a provision, but then it is immaterial. So let's see the question, and then we'll be better be able to figure it out. Okay. Sakura has produced a draft audit report for your review, an extract of which is shown below. Okay. Let's read the extract. To the directors, independent audit report, to the directors of Aether Drills and Company. Okay, so without reading any question, when you're doing your case study, when you're reading your case studies, you should be able to find what can be the potential errors or what can be the potential answers or whatever. If you read this particular question line, the directors of Aether and Company, do you think that the auditor's report is made towards the directors? No, right? This is a wrong thing that they have done in the audit report. This should be made to the shareholders or the stakeholders of the company. So basically, this is addressed to shareholders or the TCWG. So basically, generally we do write shareholders of a particular company. Okay. So I think this is a miss. Then basis for opinion and disclaimer of opinion. Okay, this is also slightly questionable to me, but let's see what does it contain. We have performed our audit based on the materiality level of 0.82 million. Again, okay. So if you know about audit report, we know that, of course, it is the responsibility of the auditor to be able to calculate the materiality and then base his judgments over the calculation that he or she has done. Okay. But when we are finalizing our audit report, when there is a draft audit report or even a final audit report, we never ever tell them that, hey, this is the basis for the materiality. Never we tell them. right? We cannot tell them this is the basis that we have taken. We can tell this is material, this is immaterial, whatever, but the basis cannot be told. So again, this statement is an issue for me. So let's see if this is a part of the question. But generally also you should be able to gauge all of these things. Even if they're not asking in the question, you should be able to know this. I'm not sure if the question is asking all of these things, but then I am just telling you that this is a little absurd statement to me. Okay. Next thing, let's read next. Okay. Our audit procedures have been proven conclusively that trade receivables are materially misstated. Again, one another issue I found over here is proven conclusively. This is a very wrong statement. Again, why is it a wrong statement? You would know that auditor always have a, auditor cannot use proven conclusively. Basically means that you have tested all of the transactions of trade receivables and then you have come to a conclusion that the trade receivables are materially misstated. That is not true. Auditor will always have samples. He will not test all of the trade receivables, balances and etc. So this is a major issue. Proven conclusively can never be used in the audit report because auditor will not have a final, he will not be having a final thing in the audit, right? So we need to be a little careful with these words that we use. So as you would know that, the auditor will always give you an, reasonable assurance. Reasonable assurance will be given, not absolute, right? You would know this, right? Absolute assurance is never given. So that is the reason this again statement, this word is always, is also pinching me. So again, let's see what the question was asking, and then we'll continue with this explanation. Okay. Okay. Next. The finance director of Aether Drills Company, K. Khan, okay, has refused to make an adjustment to write off a significant trade receivable balance. Again, for the students who are very well versed of the audit report and everything, you know that we never name anybody in our audit report. No naming happens. It is not professional. So here they have said the finance director of this company, Aether Khan. This is again a wrong thing that they have done. We should always write management or like TCWG or something, or not TCWG, I'm sorry. Management as a whole has refused to make. So we cannot name any particular person that this person refused to make something in the financial statements. Again, a wrong thing that they have done. So let's see. I'm finding so many wrong things in the statements that they've provided. Okay. Next thing, in our opinion, the financial statements of a company are materially misstated and therefore we express a disclaimer of opinion because we do not think that they are presented fairly. Okay, so whenever we're talking about disclosure or disclaimer of opinion, this is not what we actually do when when we have a disclaimer of opinion. For the people who know what the disclaimer of opinion means, would know that disclaimer disclaimer of opinion is always is used when the auditor cannot form an opinion, when he does not have any opinion that will it be qualified, will it be modified, whatever, what opinion will it be, because he is not having any sufficient or appropriate evidence to conclude the same. But here we do have it because this is when we talk about our trade receivables, specifically when we talk about, we know that it will be a material issue because see, material qualified except for opinion. Why? I'll explain you that also. Let's see. Okay, so here if we see, सबसे पहले if we see, this is a balance of 2.5 million. So if we compare 2.5 million to the materiality level of 0.82 million, it is material. That's the first thing. Right. Second thing is that the financial statements will not be adjusted as concluded by the management. Management is saying we won't be adjusting it. So again, this forms part of your second explanation. So in my opinion, it would be a qualified opinion. We definitely have something in our hands to be able to justify the same. We have our evidences also, right? So that is the reason I don't think a disclaimer opinion should be there. But let's see if there's something else that they are saying. Let's see. So this is how you should read the case study, and this is how you should analyze the case study simultaneously when you're reading it. So that it's easier for you when you're answering these questions. Okay. Okay. Then we have emphasis on matter paragraph. Okay. So little bit of I would like to give little bit of information over our emphasis on matter paragraph only. Also, before we start with our reading of this and reading of the questions. So you always I always tell my students that you always need to have three things in mind when you're talking about the EOMP paragraph, which is the emphasis on matter paragraph. First thing is that only the material matters, the matters which are material, only those matters are included in emphasis on matter paragraph. So if it is immaterial, it straight away goes out of the bucket of EOMP. Second thing is only the important matters or matters which are fundamental to users of financial statements, understanding of the users of financial statements, only those matters should be included in the EOMP. Matters which are not fundamental to the users for the understanding of the financial statements should never be part of the EOMP paragraph. And lastly, if it has been appropriately accounted for, and we have also disclosed it in the financial statements. Okay? If we have appropriately accounted for and we have disclosed it, only those matters we need to tell them to the management, right? Only those matters has to be told or can be a part of your EOMP paragraph or the emphasis on matter paragraph. Right. So I will be explaining this in the next cases also. But should only be highlighted which have been appropriately accounted for and disclosed in the financial statements. If if it has not been appropriately, if the management is not appropriately accounting it or not disclosing it in the financial statements, then it does not form part of your EOMP paragraph. Okay. So let's move forward. So these three things you need to keep in mind about the EOMP paragraph, and then you'll be good to go with it. Okay, now let's read. बहुत ज़्यादा ज्ञान हो गया. Let's read the questions first now. Let me solve it for you now. Okay. Okay. So a company is facing a legal claim for the amount of 15,000. Of course, हमने ऊपर देखा था यहाँ पे that we had a 15,000 rupees damages. Okay. For an ex-employee, in our opinion, this matter should be recognized as a provision, but it is not included in the statement of financial position. We draw your attention to this breach of relevant IFRS. Okay. Now let's read the first question that we have. Let's read it. With reference to audit report extract, the extract which is given to us over here, prepared by Sakura, identify whether each of the following statement is true or false. Okay. The basis for opinion and opinion paragraphs should not be combined. That is true actually. And the basis for opinion paragraph should be placed before the very, very wrong statement. This is a wrong statement. So okay, let's see. See. So the first statement here, the basis for opinion paragraph and opinion should not be combined. This is true because when we're talking about audit report, if you know the sequence of audit report, you know that opinion paragraph comes first, and then we have followed by the basis for opinion paragraph. And then we have other paragraph if we have like MURGC paragraph or EOMP paragraph or other matter paragraph. All of these paragraphs come after the basis for qualified, like basis for opinion paragraph, right? So they are saying the first statement is correct actually. It is stating the basis for opinion and opinion paragraph, this and this should never be combined. This is fine. But the next statement that they're saying, the opinion for the basis for opinion paragraph should be placed before the opinion. No. The sequence is opinion, then basis for opinion, and then any other paragraph. So this is a false statement. Okay. The title and the address in the extract draft of the draft audit report are correct. So title and no, not the address. I just explained. So I did not read the questions, but directors को नहीं करते. This is always to the shareholder. So a false statement. Okay. If an emphasis on matter paragraph EOMP is required to be added in the audit report, it will be placed before the basis for opinion paragraph to provide appropriate context to auditor's opinion. Absolutely wrong. So I just told you कि यहाँ पे this will be always after the basis for opinion paragraph. So they can have their own sequences after this, but this will be always after the basis for like opinion paragraph. So this is again a false statement. So see, when we read the question, if you're simultaneously understanding it, it becomes the question answering process becomes very, very easy and very, very fast also, right? Okay. So let's move to the next question. So all of these statements here are false. I hope that you understood why is it so. Okay. So this is false, this is false, this is false. Next. Okay. Which of the following statements has been incorrectly, so we need to be very careful with this, included in the basis for opinion and disclaimer of opinion section in the draft audit report extract? So basically they're talking about this particular paragraph, which we have more or less discussed. That let's see. So we need to see incorrectly included. Okay. So we have performed and our audit based on the materiality level of 0.82 million. Again, as I mentioned previously as well, that this should never be part of your this should never be, materiality should never be disclosed in opinion paragraph. When we're talking about the opinion, the materiality level should not be disclosed. We can say that it is material, it is immaterial, but then we cannot talk about the level of the materiality. This is of course auditor's responsibility, but it will not be disclosed in the opinion or basis for opinion paragraph or something on those lines. So this is an incorrect statement. Okay. Next thing is, our audit procedures have been proven conclusively that trade receivables are materially misstated. Again, as I said, proven conclusively should never be a part of it. And why also I told you because auditor will always provide, the audit procedures will always provide a reasonable assurance, a reasonable opinion, but not absolute assurance, right? And proven conclusively basically here means that we have identified all the transactions of the trade receivables and we saw that all the transactions are wrong, which is not the case over here. One of the it is wrong, and plus we also do sampling. We do not test all of the samples of the trade receivables. So again, a wrong statement. 1 and 2. Okay, the finance director of Aether Drills Company, K. Khan, has refused to make an adjustment to write off a significant trade receivable balance. Again, I said that we never name. This is not a professional thing to name. This is a professional issue which is there. So it is unprofessional wording, which is naming the person. We can simply write the management instead of writing the finance director, instead of writing the name also. So there with the finance director, they've also named the person, which is a big blunder they have done. So in my opinion, all the three statements that they have just now mentioned are incorrect to the financial statements, like to the draft audit report. Okay. So all three. Next. It will just, yeah, okay. Which of the following options correctly names the audit opinion regarding the receivable balance of 2.5 million? I think I have also explained this, that it will be a qualified except for opinion because it is material and because they're not adjusting it to the financial statements. But I also explained these four for you people to be able to understand that why these are not correct. Let's see. Okay, so disclaimer of opinion, as I just mentioned, that disclaimer, when we're talking about the disclaimer of opinion, disclaimer is only given when the auditor is not sure of the opinion, when he does not know what kind of opinion will be given, and then because he does not have audit evidence regarding the same. But here we know that what opinion will be given, and we also have the evidence, and we also know that the management is not confirming that they will not be adjusting the financial statements. Of course, we have the evidence, so disclaimer won't be definitely the answer, right? Then we have qualified except for opinion with other matter paragraph. So, okay. So other matter paragraph is only written or only given in those cases wherein you have something extra to tell to the, the users of the financial statements apart from all what is already being disclosed. So here our matter is, if they are saying these two, so they are saying that we will be having except for opinion, and so this matter will be disclosed in the except for opinion. Plus, they also saying OMP paragraph. We do not have anything else to disclose in the OMP paragraph, right? We only have this particular matter. There's no adding on to OMP paragraph, right? So this is the reason OMP paragraph will not be there. A qualified except for opinion, I just explained, this will be the answer. Adverse opinion, again, this is not something very, absurd or very, very huge. So that is the reason adverse won't be there, because it is material, but it's not pervasive. It's not pervasive, right? It is material, but not pervasive. That is the reason adverse opinion won't be there, and we will be having a qualified except for opinion for this particular case. I hope that you people have understood. Let me know if there was any doubt, any questions in the comments down below, and let's move to the next question that we have, which is the second last question of this particular case scenario. Okay. The use of emphasis on matter paragraph in respect to the court case is not appropriate. Of course, court case, and we're also having emphasis on matter paragraph. Which of the following statements correctly explains the reason why EUMP paragraph should not be used in respect of the court case? Okay, let's see. Okay. The court the court case and its potential legal consequences are not material. I just now told that this 15,000 is not material to the materiality level of 0.82 million. So it's immaterial. I just now explained about the EOMP paragraph and the three things that we look. We look at the materiality, we look at if it has been appropriately or disclosed in the financial statements, and then we look at if it is fundamental to the understanding of the financial statements for the users, right? So material is not material, so this is correct. The matter is not fundamental to the users of the users understanding of the financial statements. Of course, it is not very, very important to the understanding of the financial statement, because it is just part of your provisions. It is a part of your provisions, right? So if this is not being included, it won't hamper my understanding of the financial statements, right? So that is the reason that this won't be a part of it, because it is, again, it is immaterial, right? Last thing is, so 1 and 2 are correct. The auditor has reached the conclusion that the court case has not been accounted for correctly. Okay, auditor has already reached the conclusion, as we saw over here also, right? And the matter has been discussed with management, who have committed that this will not be adjusted. Okay, so now if we see the third point, the second point that just mentioned, that EOMB paragraph will only and only be there in those cases wherein the matter has been appropriately talked about in the financial statements and it has been disclosed in the financial statements. Now, management is very clearly here saying that this won't be adjusted. So this won't form a part of your EOMP paragraph. So these three are the cases. See, it becomes so easy if I've already explained you these things, right? When we already understood the case study really very well, we're able to answer the questions very, very quickly. If you're not able to understand the case study, if you just read upper se, then you won't be able to answer the questions this fast and this easily as well, right? So reading of the case study very, very carefully, analyzing the case study on your own, seeing that this is wrong, this is correct, this is wrong, this is correct, is very, very important to be able to answer the questions also. Okay, now the last question, let's read. Sorry. Okay. An audit assistant in the team wants a better understanding of the effect subsequent events have on audit and has made the following statements. Okay. Which of the statements above in relation to subsequent events are true? So subsequent events only we need to see are true. All material subsequent events require the numbers in the financial statements to be adjusted. No, not all material subsequent events require. Okay, so let me just explain it quickly, this concept as well. Okay, so if you know about IAS 10, events after reporting period, we have two events. One is adjusting and one is non-adjusting events, right? So only if it is material events, of course, we need to talk about in the financial statements, right? But if the material event is So basically, there are two subsequent events can happen. Okay, types of subsequent events: non-adjusting, non-adjusting. So if the material event is, if the event is material, but it is non-adjusting, we do not need to adjust in the financial statement because it happened after the year end, then it does not need an adjustment. So not all material subsequent events need adjustment. Only the adjusting material events need adjustment in the financial statements. Also, how do you distinguish, how do you identify what is an adjusting event, what is a non-adjusting event? Let's see. So for example, in the question also, you thought, you know that the year end is 31st of March 2005, right? So adjusting events would be the matters which happened before the year end, like these two cases which happened before the year end, and also the conditions also existed before the year end. So this is an adjusting thing because this happened ultimately before the year end. But non-adjusting events are things or events which are happen either after the year end. So basically, year end was 31st of March, and the event after happened on 1st of May. Then this is a non-adjusting event. But there can be a scenario wherein the conditions of this particular event happening existed even before the year end. For example, I'll give you a very quick example. Here, when we saw that the person is suing the company. So, for example, this person went into the liquidation. So, for example, let's take another example. For example, we had a customer and it went into liquidation. So this one only. Okay, let's take example. Let me not confuse you. Just a minute. Okay. So for example, here we know that the customer went into liquidation in February. For example, it did not went into liquidation in February. It went in May 2005, which is after the year end, right? But we already knew previously also in Jan that maybe we won't be able to receive the full balance, but maybe 50% can be received because the company is facing going concern issues. Okay. So this condition, even, and then in May 2005, we got to know that they are going into administration. That means 100% of the balance won't be received. So now the condition of this thing happening, this event happening, existed even before the year end, right? Which is your 31st of March. That is the reason this will be considered as a material non-adjusting event, and it will thus become adjusting event only, right? And there can be a case scenario wherein your financial statements, your adjusting event is material and non-material. In those cases we'll be seeing. So basically there can be different cases for the same. Plus another example which is non-adjusting, this case, if you are considering this case, it will be adjusting event. Now another case, let's see, if for example fire broke down in your warehouse after the year end, this is a non-adjusting event because iski condition did not exist before the year end, right? So I hope that this is clear. If not, I will also be making a separate video just to, so that people are able to understand. So yeah. So again, not all material subsequent events need an adjustment. Some can be non-adjusting also, just like we discussed right now. So this is fine. Okay. So I'm sorry, this is wrong. Okay. A non-adjusting event is a subsequent event for which no amendments to the current financial years are required. Again, a wrong statement. I just explained. If there's a non-adjusting event and the conditions of that event occurring were existent before the year end, then we need a modification in the financial statements, just like we discussed about the person who was going into the liquidation. 50% we had the chances before year as well, and then we got to know in May 2005 that the 100% of the company is going into liquidation. So we need to amend our financial statements because the conditions existed before the year end as well. So second is also wrong. The auditor's responsibility for subsequent events which occur prior to the auditor's report being signed are different from the responsibilities after being signed. So of course, yes. See, auditors, so let's see this one also. So there are two case scenarios. One is before the year end, before the auditor's report has been signed, and after the auditor's report has been signed. Okay. So those events which happen before the auditor's report has been signed, of course, all of the work and the procedures and the evidence and the procedures has to be done by the auditor themselves actively. Okay, actively they need to do, because this is before the signing of the auditor's report. But after the auditor's report has been signed, the auditor does not have a lot to do after it has been signed, and does not need to look actively to the subsequent event that is happening, because of course this is the बहुत सारे events होंगे which will happen after the signing of the audit report, and auditor does not have so much of responsibility कि वो इतने सारे events को देखे, right? So that is the reason they will not actively look at, but they will just passively look at, okay, this event happened after, before the year end, and this is the conclusion for this. So that is all that they need to do. So yes, of course, before the year end and after the year end, their responsibility is completely different. So this is fine. The auditor should request a written representation confirming that all relevant subsequent events are disclosed. Very, very true. If you're aware of ISA 560, this is what ISA 560 actually says. So this is absolutely correct. So third and fourth are absolutely correct in this statement. I hope that this case study was, I think this was easy if you knew about, IS 10, if you knew about the audit report and everything. So I hope that this video was helpful. You got to know your answers, you got to understand them, you got to understand the conceptual concepts behind them. Let me know if you people have any doubts, any questions. If you want me to make a separate video of any particular topic with like proper examples, I'll do that as well. So see you in the next video.